Balrampur Chini has gained nearly 30% in the past 1 month. Shree Renuka is up over 25%. And you pick up any stock, and that's pretty much spelling out the same story. Let me take it across to Ashesha, who tells us why these sugar companies have been buzzing.
Stocks have been buzzing of late. The likes of Balrampur Chini, Dalmia Bharat, Shree Renuka Sugar, Dhampur Sugar have all given returns in the range of 13 to 28% in the last 1 month or so. But what's the buzz all about? Sugar season in India, which started in the month of October 21, is progressing well. Indian sugar mills have produced 115 lakh tons of sugar up to 31st December 2021, which is a 4.3% growth on a year-on-year basis. Domestic sugar prices have remained reasonably strong. They are higher by 4% on a year-on-year basis. Global sugar prices too have remained in the range of $0.18 to $0.20 per pound in the past 2 months, which have helped Indian sugar mills in export contracts. Also, Indian government is continuing to push aggressively on ethanol blending program. Against a requirement of 459 litres for 10% ethanol blending, OMCs have so far allocated about 366 crore litres of ethanol for supply in 21-22. In a recent development that came in for the sector, WTO's panel in the ruling on December 14, 2021 recommended India to withdraw its domestic schemes to support sugarcane producers. India has, however, appealed in the appellate body of the WTO against the panel's ruling. Also, Government of India recently issued an advisory to car makers to introduce flex fuel vehicles which can run on 100% ethanol within the next 6 months. On the export front, as per ISMA, owing to fall in global prices of raw sugar, not much export contracts have happened in the last 1 month or so. Mills are still waiting for the opportune time to enter further into export contracts. CRISIL says sugar mills are expected to see both revenue and profitability improve in 2022 season. Sugar prices are expected to rise 16 to 17% this season. Higher sales volumes and realizations will aid revenue growth of 18 to 19%.
Okay, let's take the conversation forward. Sameer Sinha, Chief Executive Officer with Triveni Engineering, and Atul Chaturvedi, Executive Chairman with Shree Renuka Sugar, they both join us. Sameer, Atul, gentlemen, good morning to both of you. I'm going to start with you, Sameer. What is your understanding of the global sugar cycle? Is there a global sugar deficit? What's happening in Brazil? The uptick, what we've seen in sugar prices, is this only an India phenomenon, or there is a global substance to it?
Well, I would say that there is a global substance to this, and the deficit we are seeing globally is about 2.5 to 3 million tons. And this is down a little bit due to slightly better crop in Brazil than the shortfall that was anticipated earlier, and also improvement in the Thai crop. But still there is a significant deficit, and India will be a keen player to get into this. So as you already know, we have the Indian industry has already contracted about 3.7 million tons of export contracts. And even though the new contracts haven't taken place in the last 1 month, we believe that towards the end of January or February or thereafter, there should be an increase in pricing, and that will assist in evacuating more sugar out of the country, as we have a target, and we believe it's an achievable target of about 6 million tons happening from the country. And the other thing is that if you would note that last year, the government announced its policy on 31st December. And therefore, after that, the country was able to export 7 million tons. Here, we already have contracts on hand of about 3.7 million tons. So that's a plus point for the country.
Right. Atul, what is the status of demand versus supply in the domestic market? Could you walk us through your understanding of post the crushing season, which got over around Diwali? How much is the stock in hand, and where do you see demand moving?
As far as the domestic demand is concerned, we actually now are penciling an increase in demand. In fact, earlier we were talking in terms of a demand of about 26 million tons domestically, but now we are penciling in something like 27 million tons, which is reasonably robust. And the reason why probably the sugar sector is getting redated, I would say ethanol has been a big game changer. something which was actually a problem in the past. Excess production used to be a problem when sugar prices used to plummet, and the government had to come up and impose that minimum selling price and all. But I think that is all now a thing of the past. With the ethanol play, the sugar sector is able to divert sugar for ethanol, and that helps their credit flows as well. So I think it would not be wrong if we start calling sugar as an energy sector and no longer as a sugar sector. Ethanol, which used to be a byproduct in the past, I won't be too surprised if going forward we start calling it as the main product and sugar as a byproduct. So we are very much on track as far as that is concerned. So that would probably ensure that the sugar availability in the country is reasonable. The prices, the downward pressure on the prices may not be there. So I'm totally agree with what Mr. Sinha said, that post January, February, prices domestically should also start moving northwards. So I think it's happier times for the sugar, and this sector has suffered quite a lot in the past, and it's important that this sector again gets revived and revived in a big way.
And if I may, just to supplement what Mr. Chaturvedi said, and I'm in full agreement with what he said, is that if you look at this year's production, which is expected at about 30.5 million, and after the diversion to ethanol of about 3.4 million, and if you look at the exports of 6 billion that we are targeting, and let's say consumption of even 26.5 million, we are down in terms of the stock holdings in the country to about 6.2 to 6.5 million, which is equivalent to just a shade under 3 months. And that's the ideal stock ratio of which we need to carry forward and ensure its sustainability for the industry.
Now, to add to what Mr. Sinha said, I would also like to congratulate the government in the sense that this time around, they did not fall prey in terms of giving export subsidy. And that has probably helped India realize much better values for its sugar. Because the world needs Indian sugar. India doesn't need to drop their prices. And generally speaking, what used to happen was India, with all the subsidies and all in play, would actually end up subsidizing the foreign buyers. This time, no longer, because the compulsion to sell is not all that strong, because you are, in any case, diverting sugar to ethanol. So I think it's happier days for the sugar sector. And I totally agree with what Mr. Sinha said in terms of the overall stock to usage ratio coming down, and end of the year, our carry out may actually come down from current 8.5 million tons to around closer to 6 million tons. But I would probably put the production a little higher than what Mr. Sinha said. Current indications are that even though UP started its production a bit late, we are still higher by close to about 5%, in spite of the fact that a lot of cane is getting diverted directly, or juice is getting diverted directly into ethanol. So I would probably place the number anywhere between 31 to 32 million tons. And that's a happy sign. And India no longer needs to worry about the excess production. And this is one sector which is shining, and shining big time.
Sure it is. It is in a sweet spot, isn't it? But Mr. Sinha, just to take on that ethanol point forward, India currently has already achieved a little over 8% ethanol blending. The target is 20% for, calendar year 23-24. Does it appear to be on track? And does the country have that kind of infrastructure and wherewithal to actually reach those numbers and perhaps even higher in the years to come?
That's a very interesting question, and I'm extremely optimistic about the answer. And let's see, we did about 8.1% this year and crossed the 300 crore mark in terms of the ethanol supplies, sharply up from the 170 to 190 crores and 5%, under 5% or 5% blending, which you were doing for the past 2 years. This year, the allocation, as you already mentioned, is about 366 crore liters, and monthly cycles will keep on coming. So we hope to be close to 10% this year, which is the target also for 22. Now, the E20 target is for the year 2025, which has been advanced from 2030 earlier, looking at the progress and the possibilities and potential of the EBP program. Now, how would this get achieved? If you look at the balance of ethanol going forward from, let's say, E20 will require about 1,000 crore liters of ethanol, and there would be usage of about 300, 350 crore liters for the potable sector, as well as from the chemical sector. So in effect, we are talking of about 1,300 crore liters of alcohol coming forward. And if you look at the other side of the equation, the supply side, it would require, and that's the estimates of about 700 crore liters coming in from the sugar manufacturers and the balance 600 from the grain manufacturers. Now, against this, the capacities have been very limited so far, let's say till the beginning of next year. But looking at the robust EBP and the impetus that the government is giving to it, huge capacities are getting added to it, and the existing players are also augmenting their capacities, both from the sugar manufacturers as well as the ethanol manufacturers. Now, we believe one of the points is that the quantum jump, let's say of about 302 crore liters, which the sugar mills, the sugar ethanol has been offered so far, to, let's say, going up to 700 crore liters would require a huge quantum coming in from the cane juice sector. We believe that for fresh capacities to come up, one small recommendation which we have over here is that might require still a tweaking of the pricing over here, because given the current sugar pricing levels, etc., the current cane juice pricing of may not give you adequate returns to set up fresh capacities over here. So that is one point. The second is also we would need to introduce an intermediate blending from 10% to 20%. I mean, there will be capacity additions happening. So intermediate blendings is another thing that we have been pushing for, let's say in sugar surplus states like UP, Maharashtra, Karnataka, etc., of at least E12 or E15 coming in before we go to the E20 numbers in 23 April onwards, so that countrywide we are in a position to achieve 20% blending by 2025. So just to sum up, we are very optimistic about this happening, and these are 2 or 3 small policy tweakings which are required for the capacities to come up. We have already seen, if you would look at the tripartite EOI, which was floated by the oil marketing companies, there has been a huge interest also from the grain side of it. So I'm quite hopeful of the E20 happening, A. And B is from the demand side, CIAM has more or less agreed the legacy vehicles can take up this intermediate blend numbers that we are taking off. And you have also mentioned about the recent address by the government to the automakers to get onto the flex fuel vehicles.
Right. Right. Yeah, absolutely. Mr. Sinha, Mr. Chaturvedi, so great to have you both on the show today and, very candidly tell us about what's really going on with the sugar sector right now, and of course, what's the visibility as well going forward. And it seems like this sugar rush is here to stay. Good speaking with you both.